Dear all, welcome to this review of the budget FY26. The finance minister has spoken, laying down the agenda of the government for next 12 months in terms of FY26. The big picture comment really was trying to revive demand in this demography and democracy combined for developing India, the Viksit Bharat, as the finance minister put it. Maybe the biggest and the best news is that government has left a lot of consumer surplus in the hands of people who paying taxes. 12 lakh rupees income will not have any income tax is the broad picture, which says savings of anywhere between 50, 70, 80,000 rupees can accrue to people based on that income which is taxed till now. This income can do reasonably good to Indian economy in terms of multiple things. Primarily, it can revive consumption. Consumption can be of any nature, can be quick consumption, can be travel tourism, can be restaurants, or it can be a consumption of some products which are durable, maybe a consumer durable, maybe a two-wheeler, maybe a four-wheeler. In turn, it can actually revive, retail lending, which is secured lending kind of thing against those assets. In some extreme cases, yes, if there is a issue on, EMI, etc. Some of this, money can be used by consumers to pay off EMIs, and possibly the best case for some people, they can actually invest more in markets based on their current consumption needs. I think in a big picture thing, we can say that capex cycle, which was the core priority for the last 3 years, by creating, corporate incentives or the PLI to create products in India for either import substitution or export promotion. That continues. The capex cycle optically looks a bit lower amount to be spent vis-a-vis last year, but in real life, what we have is that there was some shortfall in FY25 actual usage of capex budget. So to that extent, there is still a growth in capex. So capex remains broadly on track. I think the consumer demand revival is the focus for this year. We hope that creates a nice ecosystem, because let's not forget, if a consumer who has 80,000 rupees consumer surplus for the year decides to go through a consumption of a durable, it can actually use this as a EMI product and have a incremental purchasing power of anything between 2 lakh to 3 lakh crores, 2 lakh to 3 lakh rupees for that person, for which the EMI can be paid from that 80,000 rupees saving. Let's not forget, these tax rate changes are more or less going to be permanent even for next year, because this 80,000 rupees saving per person on a 12 lakh rupees bracket can accrue for a longer term. I think that's mainly is. I think there are a lot of fine prints which we will get, but yeah, the macro picture is demand revival, which was some sort of a worry in last 6 months in the economy. The way a lot of commentary from corporates, especially on the consumer side, were giving out. That's mainly from us at Mahindra Manulife investment team. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.